Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, August the 9th, the year's 2020. Let's talk trading. It's time for the weekly open and gap. And as viewers should know by now, these videos are for educational purposes only. Your results may differ from mine. Trading's extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And make sure you have your risk management in place so you don't lose more on any one trade than what you're willing to lose. Now, let's just jump right into it. The weekly gaps, we've got one that hasn't filled, the rest have all filled. So hopefully somebody out there was able to take advantage of that weekly gap. Now, looking at the pound here, we are inside the range of the first day of the month, and we're going to be putting in the range for the first day of the week today. So far, we've got a green day, 19 pips above the open. You can see here and here, but we're down 4 for the month, and we're down 173 for the year. And we opened below the previous day's midpoint. And I still neglected to fix that inside bar. As you can see, we've got some inside bars action happening here, denoted by the gray and the blue. Range, since it's still Sunday/Monday, depending on where you are, no pairs over 100. Pivot point, looks like we just took it out this last hour. Not enough range for the rat, only 34.6 at the moment. And we've seen that wick zone. And the weekly pivot, looks like we took the weekly pivot out already too. So actually, looks like we're just about to take it out. So let's see, we've got a high here of 75.2. It's missed it by a point. And looking at the daily, as we can see, we've taken that out. So far, August, no missed pivots. In and out of that wick zone here, that lower wick zone. And just looking at some of the ranges, you can see here, 35 at the 0 percentile, so ranges has to expand. And, you know, we've been working with some traders, when I say we, Walmall and myself, and there seems to be a common thread, or maybe misunderstanding or misconception. But traders say, hey, you know, we need your help. You know, I've blown up accounts and, you know, you guys do well. So, you know, give me some advice, help me out. And I pretty much tell people the same thing. It's like, number one, you've got to have an exit trading plan. And I've done a video on the exit trading plan. I might have to do another one because it seems like traders out there don't want to search my channel for the exit trading plan video. And basically, you need to know what you're going to do every pip of the way. The first 10 pips up and the first 10 pips down. You know, in other words, your first 10 positive pips and your first 10 negative pips. What are you going to do when price hits that level? It has to be written down or typed into the computer. You can use the My Notes file if you want, but it has to be there. Because if it's not, chances are you're not going to execute it. And on the other hand, there's some people that, you know, they really want to trade for a living. Well, if you want to trade for a living, you got to get serious. You got to be smart. You have to be realistic. Now, people out there wanting to make 50 pips a day, day after day. Do you really think that's realistic? People out there who want to make 10 pips a day, is that more realistic than 50? And if you make 50 pips a day, do you really think you should have a stop loss? If you want to make, 20 pips, I'm sorry, 10 pips a day, do you really think you should allow a stop loss of 20 or 40? Do you think that makes any sense? I mean, if you're only trying to make 10 in a day and you allow a 40 pip loss, that's 4 days worth of gains wiped out in one trade. It doesn't make sense. You guys got to work the numbers. This math is just too simple. You know, if you're in a trade and you lose 10 pips, then you've got to make up a day. I mean, if you're in a trade and it goes against you 5 pips, I mean, what are you waiting for? It's going against you. You waiting for 6, 7, 8, 9, 10? I mean, sure, there's going to be some range, but like on the pound, the spread is about 1.5, give or take a couple of pips. That's what I'm looking at when I trade it. So if it gets to 5, that's over 3 spreads that I have to overcome. I mean, and it's about time to just cut the loss, unless I'm trading at such a small risk and then it's not going to matter to me. In other words, maybe I'm not risking a full position like I normally would. But that's part of your trading plan. So you just gotta get real about it. And then, you know, if you've got any of these ideas that the brokers are out to get you or the market's out to get you, I think I mentioned that last week. You just have to give it up. You got to stop that nonsense because that's what it is. The market doesn't give a rip about you, me, or any of us other small time traders because that's what we are. I mean, even if we're trading $100 a pip, we're still small time. Okay. Now, we can make a living off $100 a pip, but as far as the market, it's $1 trillion market. Let's just be real here. And people are wondering, it's like, well, we want to talk more about this method or that method. I mean, the method, yes, it's important, but you're focusing on something external. I mean, how many times do I point out the simple price action screen here? How many times? Like every day, right? I mean, there's nothing fancy about this method, but we just know certain things. Price has to range. It usually ranges more than 10 pips in an hour. So if it opens between the line, it's going to have to cross one line, the other line, or both lines. I mean, you can see it here. It just right here, it barely crossed it, but it crossed it. Once again, it crossed it. It crossed it. So far this hour, we just started about 3 minutes ago. Hasn't crossed it. But how much you want to bet it crosses one of these lines, right? I mean, it's just that simple. But, there's so many shiny objects out there, so many esoteric entry methods. You want to use all kinds of different things. And because most traders, new traders, struggling traders, you traders get quote unquote suckered into it. You see something on a trading forum or you get something in an email or you see some YouTube video pop up and this guy's got all these cool looking indicators and lines and shapes on the chart and wow, they must know what they're talking about. And then you try it and you get all cut up. But I mean, when you listen to these guys, just ask yourself, how much time do they spend on their method, these entries, versus how much time do they spend teaching you about exits or your exit playbook, versus how much time do they work on you as a trader, getting your mind right so you don't succumb to any of the things that you shouldn't succumb to that we talk about, right? The brain management part. The FOMO, that's one of the biggest ones, causes people to rush into trades. And the ROMO, you get in a trade, you get some profit, you get out, and then it keeps going in your direction. And so then what happens is you'll cycle between these two. You'll stay in when you should get out, and you'll get in when you should be staying out because you're not trading your plan. I've told you this before. As a trader, you're a trained monkey. Okay, you got this plan, and when you see something, you pull the lever, and then hopefully you get the banana. But once again, this is speculation. You're not going to get the banana every time. Sometimes the market's going to take one of your bananas away from you. But that's trading, and you just have to understand it. And I'm not trying to insult anybody by saying trained monkey, but there can't be any thought in it. It has to be already thought out ahead of time. So when you get in the heat of the battle, the heat of the trade, and you're up 7 pips, and all of a sudden it takes 2 pips away, either you've already moved your stop up or to click out of it because it's written down. And after a while, after you've read it 1,000 times, it's going to be burned in your brain. It's going to be second nature. You're not going to think about it. You're going to react. And that's the state you want to be in, where you react to the market based on your trading plan. And then when you see all this other stuff come out, you'll look at it. You might read it. You might watch the video. You'll smile. But when it comes back to it, you get back to work, you're going to stick with your plan. Why? Because it's profitable. Why? Because you've been working it. Why? Because the statistics are on your side. Especially if, and you don't have to use my method, but if you take take the frequency distribution indicator or the one of the price action indicators, the real-time travel, and then you can see if the market does this, then it will do that X number of times out of Y number of times. And that's where you see, hey, you know what? If I stick with this plan, if I just keep trading every time price hits that horizontal line, if I just go with it every time it does it, I'm going to be able to make some pips. And if you only need to make 10 a day, how many trades are you going to need to make your 10? Right here, you could have probably made 5. Right here, you could have made 5. Right there, you were just stuck in the trade. You could have made 10 right there in less than 2 hours. So, and then the other thing is, once you get in and you do the job, the 10 pips, you quit. You quit for the day. Now you go on and do something else, play with the kids, read a book, exercise, meditate, I don't know, cross stitch, whatever you want to do. Work on your Miata or your Vet or whatever, your Ferrari. But the point is this trading's a job. You go in, you get the job done, and then you're done, and then you go do, because the whole idea about trading is being able to make money with little to no effort per se, other than clicking a mouse. And maybe you're there for an hour or 2 or 3 or 4, and then you are done. You don't have to be an addict. You don't have to trade the full 8-hour session or 12-hour session or 16-hour sessions. You don't have to do that. So I hope you guys out there, you understand what I'm trying to get, the point I'm trying to get across here. It's not to beat you up, but it's to get your mind right. Because if your mind isn't right, you're not going to trade well. And so when you sit down at this, trading platform the rest of the week, you just have to remember one thing. It's not what you trade, it's how you trade it. So I want you to go out there and drain the banks this week. And if you haven't already, please click subscribe and please click like on the YouTube like button. Maybe this will bump up, and because I'm getting about 100 or so views a day, but it'd be nice if I could get 1,000, because that means more traders would be learning instead of getting fleeced by some of these market gurus out there that just want to sell them something. That's the whole reason why I do this, is so you don't have to buy anything. So this is TheRumpledOne signing out.